Priscilla Barrera with the Investing News Network, and here with me today is Rob Fuhrman, Senior Investment Analyst at Katusa Research. Rob, thank you so much for joining us today.
Thanks for having me.
All right, so we're here at day one of the International Mining Investment Conference. How are you finding the event so far?
I think it's great. These Jay and Cambridge guys always do a great job. We're big supporters of the event. We participate in all of the conferences. Great lineup of companies. They've done a great job.
All right, and today you gave a presentation about green energy and battery metals. Can you let our audience know why you're interested in these markets?
Sure. Well, it's probably the fastest growing sector right now, especially in the metals markets. There's a lot of activity, there's a lot of deals, and that means there's a lot of opportunity for us to make money. I work for Katusa Research. We manage a large $200 million fund that's focused entirely on the commodity sector, so we're very well versed in the current activities, and so we pay attention to a lot of things that's going on. It's very interesting.
Right. So what is your forecast for the electric car sector in particular? What are you seeing in that?
We're extremely bullish over, I mean, you have to take this with a grain of salt. You know, you want to look at the electric vehicle sector over a 20 or 30 year time horizon. Just because Tesla misses their quarterly production numbers isn't the end of the world. But there's no debate in our office, at least, that the electric vehicle is going to be the vehicle moving forward into 2030, 2040. You know, we expect 60 million plus vehicles sold annually by 2040.
Wow. So speaking specifically about battery metals and talking about lithium, there are a lot of things happening in the market. We had a very interesting Q1.
Yes.
What are some other factors that investors should keep an eye on for the rest of the year?
Well, there's been a lot of money that's been invested in the lithium sector over the last couple of years at both the major level and at the junior level. So in the lithium sector, you've got 4 producers that essentially produce 80% of the world's supply, and they're not going to relinquish that anytime soon. And so there's a fight going on between the juniors that are trying to gain market share and the producers who are trying to keep it. And so what we've seen is the price has gone up significantly over the last couple of years because it's a small market. Right now there's 220,000 metric tons of lithium sold every year. That's a very small market. In comparison, the copper market's 25 million metric tons. So you're talking about a much smaller scale right now, but it's poised to grow, and so that's where the opportunity is. And so moving forward for the rest of the quarter, or for the rest of the year, you're probably going to see a lot more of the same. I think there's going to be a lot of noise, but what you're going to see moving forward are a lot of the companies that have a feasibility report are going to be moving to that next stage, or they're going to be acquired, because these producers, these 4 senior producers, want to keep their market share, and the best way to do that is by acquiring a junior producer or junior development stage company.
All right, and jumping to another battery metal, cobalt.
Yep.
We heard Tesla talk about reducing cobalt in their batteries. How do you think this will impact the market, and is the party over for cobalt?
Well, I touched on that in my talk today, and it's an interesting concept because it's a great metal from an energy density point, so the chemistry is fantastic. The problem is there's not enough supply, and that's okay to an extent, but if you're trying to change the world like Tesla and Volvo and all these large car producers are trying to do and move to EVs, you need scale. And the issue has been and will continue to be for cobalt is there enough scale? Most of the production is in the DRC, so that's an issue. And so companies are forced to look elsewhere. I don't think the party is necessarily over, but there's definitely going to be a shift in mentality away from the chemistry that's being used. Now they're going to be using more nickel, less cobalt within the battery itself, which means more demand for nickel, less demand for cobalt moving forward. And so that changes our forecast. Still very bullish, but as a junior, I think it'll be much harder. I think right now, if you don't have a resource estimate, it's going to be very hard to put that project into production, which means you're not going to be able to capitalize on these extremely high prices in the cobalt market today.
Right, so where is the place to be in the battery metal sector?
We really like copper. Dr. Copper is a great bellwether for global economics as a whole, and it's extremely exposed to green energy and to the electric vehicle movement. So there's thousands of pounds that are being used every day in wind turbines, solar panels, as well as electric vehicles, and so you kind of get a double whammy investment effect there. And so we project that by 2040 there'll be 6 million tons of copper demand coming from the green energy and electric vehicle sector. So that's like like 20-25% of current production. That's enormous considering the world's largest mine produces just shy of 1 million metric tons annually. So we're going to need 6 more of those to make up for that demand. That's a lot, and that's not easy to do because there haven't been many copper discoveries in the last few years.
Right, so you touched on copper, there are also, and you touched on nickel before as well. What about other metals such as vanadium?
Vanadium is an interesting one. It doesn't really have an application in the EV sense. The focus on vanadium as well as zinc is more at the commercial utility storage level, and that is still a very to be determined market right now. There's no clear winner. The big issue with vanadium is there's even less supply of that than there is of cobalt, and so that makes scaling at a world level very difficult. Not to say it can't happen, but it's still very early days. Utility storage, though, is probably the next large egg that needs to be cracked in the sector, and we don't quite know who the winner is going to be yet.
Right, and as an experienced investor, what is the one mistake investors new to the sector should avoid making?
Definitely don't chase a hot sector. Right now, obviously the batteries metal sector is extremely hot. You don't want to be chasing at these levels. You don't want to be putting your money into flyers that you haven't done correct research in. And so that's what we talk to our retail audience a lot at our website. And we talk a lot about, don't chase, invest with the right management team, be patient, be an alligator, and invest smart for the long haul.
Right, and when choosing companies in the battery metal sector, what do you look for, or what are you looking at?
We look for world-class management teams to start with. You're looking for somebody that's probably done this before. A great example is in the lithium sector. Katusa was investing in lithium 10 years ago, well before the EV sector was around. So this time, we made sure we invested with that same group again and have done well. And so you want to always invest in a management team that's done well, well capitalized, and that is, a forward-thinking company that's not just jumping into the space because it's hot. That's another big pitfall. Companies, there's lots of, we call them rounders, because they jump from lithium to cobalt and then to uranium and then back because it's whatever's sexy and hot. That's not the way to invest as a long-term investor.
All right, thank you so much for joining us today.
Thanks, Priscilla.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me was Rob Fuhrman of Katusa Research.